Intellectual property allowances. Intellectual property either is acquired or developed. The aspect of developed is excluded from your syllabus, so that's where research and development comes in. We're only really looking at intellectual property that is acquired or renewed. We can obtain or acquire intellectual property. For Section 11G Cap C, we are excluding trademarks. So trademarks would not qualify, and it must be used in the production of income in order to qualify for an 11G Cap C. It must be brought into use for the first time. In the case where it is less than 5,000, we get the deduction in full. More than 5,000, well, then it depends what it is. 10% for a design, 5% for anything else. Remember, this does not include trademarks, but it would include something like a patent, an invention, copyright. The allowance is not prorated. In the case of an extension or a renewal or a registration of intellectual property, we now do include trademarks in terms of Section 11G Cap B. Again, it must be used in the production of income. If we have any costs relating to the extension, renewal, or registration of any intellectual property, we will be able to claim 100%. Remember, intellectual property that we've acquired would generally not be allowed as a deduction under Section 11A because it is seen as capital in nature, or in the case where it is not used in the production of income. So just remember, 11G Cap C, we exclude trademarks. It must be used in the production of income, and we must have brought it into use for the first time for the purpose of a trade. If it's less than 5,000, we get the full deduction. More than 5,000, we get 5% per annum on any invention, patent, copyright. Obviously, remember, not a trademark, and 10% on any design or similar property. Remember, we do not apportion this allowance. When it comes to the registration costs or the renewal costs of intellectual property in terms of Section 11G Cap B, we're now looking at trademarks as well, and here we will get a deduction in full, 100%. Just remember, Section 23I, the anti-avoidance rules have been excluded from your syllabus. We also have a little example. ABS acquired a trademark for the AB Buster for $4,000 on the 1st of June. A patent design for the AB Salute exercise machine was purchased on the 30th of September for $100,000. ABS Limited has a December year-end. What are the income tax implications? Well, in terms of the trademark, we do not get a deduction for any purchase of a trademark in terms of Section 11GC. We also would not qualify for a Section 11G Cap B because this does not relate to the registration, renewal of that trademark. With regards to the patent design, we will get Section 11GC, 10% of that 100,000 as an allowance because it is a design and it costs more than 5,000.